What's up, YouTube? Back with another trading recap. I had a phenomenal day on the markets, and I wanted to break down my thought process, walk you through the trade that I made, and the critical levels that I was watching today. So let's get right into it. I made my trades on the S&P 500 today. We have been seeing insane strength on the markets for the last months. And we had CPI news yesterday. The Fed decided they were not going to hike the interest rates. And I guess everybody made everybody super bullish today. And you can see, well, let's look at the daily. You had a massive strength on the daily chart. I mean, this candle this candle just went absolutely ballistic today. Buyers just showed up all day. So one of the points I want to talk about is adapting to current market conditions. And I'm sure you've heard me say it, but the reason that it's important specifically today is if you look at this trend right here, if you are the kind of person that looks at an uptrend and thinks, I'm going to play to the downside, I'm going to be the guy who spots that trade that's going to short and it's going to break that trend and it's going to sell off. If you're that guy who sits around and waiting for that trend to break and says, I'm only going to play with sellers today because this trend should break, it has to break. It can't just keep on going up forever. That is the kind of mentality which is going to crush you, and you're going to be constantly fighting buyers. So, this is why I say you need to switch and adapt to the market conditions that you're seeing now with your own eyes. Play with the market. Trust me, I used to be that guy that would sit around and wait for the trend to break. And I think part of it is because it's satisfying your ego. You want to feel good that you were the one who guessed that the trend was going to break here because it does feel good. I've done it before, but the reason that I'm telling you that you shouldn't do it is because it's not going to benefit you in the long term. We don't just do things that satisfy our ego. That's not going to build us for long term success. You want to do things that will work over the long term and develop help you develop your process. Little trades that you get one hitters and you make 300%. That's not part of your process. Yes, you might be able to make money, but it's going to mess up your mental framework. So back to the trade I made today. That was one of the main factors which helped me in this trade today. So I might as well go right into my pre-market plan. I told you guys in the last video, but every single day I make a pre-market plan so I can hold myself accountable. This is what I'm looking for. This is what I'm going to do if this level breaks. So right here you can see I had a head and shoulders, which I spotted. This supply imbalance came from way back, probably. Well, I talked about it in yesterday's video, but it came back from way in March of last year. So I'm thinking if we come back into this level, I want to look for sellers. S&P, QQQ, Tesla, Apple, Nvidia were all opening up underneath end of day, which usually is a bearish sign. And you want to wait for price to come back to end of day and then see who takes control of the market. Now, this is where you need to come up with your plan. So here I'm looking for a head and shoulders. Come up with a level where if that level is broken, you're no longer looking for head and shoulders. You come up with a new plan because you can't just sit around all day waiting. Oh, maybe the shoulder is going to be a little bit higher. Maybe there's not going to be a reversal at end of day. Maybe there's going to be a reversal at the supply imbalance or at the double top. So you need to come up with a level where you're going to say, okay, if this level is broken, I know that buyers are here, sellers are not defending the head and shoulders, and now I'm going to play with buyers. So today, that was end of day. End of day was the level where I say in my mind, if this level breaks, now I'm playing with buyers. I'm not looking at the head and shoulders anymore. And just like that, you switch up your plan and you play with buyers. That's what I mean by being in a constant state of flow where you are able to change your plans when you see the price action that tells you that. If you cannot be stuck in the mindset where you're just waiting around for the head and shoulders and you just keep making excuses about why the shoulder is going to be a little bit higher. You cannot do that. Come up with a level. If it breaks, Now I'm playing with buyers. So you can see right here, this is what it looked like when the market opened. I'm sure many people were stuck in that bearish state of mind and they were waiting for this right shoulder to form. So they weren't getting in any trades. Or if they were getting in, they were stopping out immediately because of all the buying pressure, fueling the move even further to the upside. So right in the end of pre-market, we saw buying suddenly, and right where everybody thought this would be the right shoulder, we got blasted through all of a sudden, and buyers just completely took control. So this is the moment where you need to switch and say, now I'm playing with buyers until I hit the double top, which was right here. Double top from the day before, prior day high is always a magnet in price, and it was. So you see, price broke through, and the next target it had was high of day. Now, I did not catch this move all the way up to high of day, but I'll walk you through my thought process of what happened as price reached this level. I will zoom in on the 1 minute. I don't often zoom in on the 1 minute, but I did today because we had a critical level here, which was prior day high. The high of Wednesday came in clutch today. First, it acted as a price magnet, just like I said. Soon as price broke end of day, it magneted to the prior day high. And this is where I place my trade. So I've always said before, I've talked about the break and retest. So this is my target. Wednesday high is my target. When price breaks that level, I want to see it retest on the top of that level and then go higher because there's acceptance of the price above that level. And when it comes back to that level, I want to see buyers show up and defend it. That is a bullish sign to me. So that's what I saw right here. So I'm zoomed way in. You can see first it acted as support, then we broke above it. Now we come down and retest it, and I saw my one green candle, and I went long. This is where I went long. My first trade of the day. I missed this whole move. Now I'm going long because I want to play with those buyers. I'm not looking at the head and shoulders. I want to play with buyers. So what happens is sellers come in immediately. Bang. And I'm out of my position. I got tight stops. My break and retest has such tight stops. That is why I love this strategy, and I'll show you later how it played in and how I stayed into my trade. But this did not look like buyers were defending this level to me. And I don't know why, but sellers suddenly came in and we saw chop around this area. Now, an important thing that I wrote in my journal is it might not look like you see this chop going back and forth through Wednesday's highs. It might not look like that level is a critical area. It might just look like buyers and sellers aren't respecting it. But you always have to leave it on your charts because it may come into play later. And it did today. It did today a little bit later. So you can see buyers and sellers were finding equal value at this area. And we kind of saw some consolidation and chop. But what eventually happened is price made it back over Wednesday's highs, came down, retested it, and buyers came in and defended. So this is where I went long again. I opened a long position. I believe I got 438 calls. Now I'm long. I'm playing with buyers. I want us to see higher highs and higher lows. I saw all of these long wicks to the bottom, a small pullback which got bought up right away, which is a very bullish sign to me. I was in this trade. I was very happy it was moving in my direction. When it moves in my direction, I know that other buyers are thinking the same way, especially large money is thinking the same way. And now I'm on the side of large money. I'm not fighting the market. I'm not wishing that it made a head and shoulders. I'm not predicting that it's going to break a trend. I'm just playing with the buyers. I'm playing with what I see. And I'm in a complete state of I'm just letting the market happen letting the market play out how it's going to play out. I have no fear. I have no anxiety. At this point, I'm just letting the market play out. I'm happy because I'm on the side of buyers. And I did want to mention my stop. My stop loss on this trade was below Wednesday's highs. And that's the beauty of these break and retest setups. You can tell very soon when the break and retest is not being defended. And then you can just get out of your position like I did right here. I went long here. I saw selling. I got right out of my position. Yes, I took about 12% loss. However, on this trade right here, I made 115% to the upside, which easily outweighed my losses here. And the reason I did this is because I let my winners run. And the way I let them run is by following the break and retest all the way up. Now, something that was different on this trade was I didn't have a real target that I was going for. And you always hear me say you need a stop loss and you need a target. But what was interesting about the S&P 500 today is my next target was 447, and that is a whole $8 away from my target, $9 away from my target, and I wasn't necessarily expecting price to go all the way there, but I didn't have a solid target in between there. So now I'm in my trade, I'm waiting, and I'm watching the break and retest to tell when I need to get out of my trade. Now let me show you what I mean by break and retest. Every time sellers came into the market, it got bought right back up again. You can see right here. I'll even put in a little level. So we had a small supply. We broke through it. We came down on top of it. Buyers step back up. That is what I call break and retest. And it's a level where first it acted as support. We broke through it. Now it's acting as demand, and we're moving higher. And that is a signal that you're in an uptrend. And as long as you see that, you're good to stay in your trade. You can see it happen here again. Support, we break through, it acts as resistance to the upside. So as long as I'm seeing these things, I'm staying in my trade. Now I see another one here form. I see support. I see resistance. We break through it. We come down on top. We have a small buy up, and we break through it. At that point, I know that buyers are no longer defending this run to the upside, and I'm out. So yes, I didn't have a perfect target, which I was going for. In that case, you need to watch price action like a hawk. This is why I zoomed in on the 1 minute chart instead of the 5 minute. I normally watch on the 5 minute, but in situations like this, I'll zoom in on the 1 minute and I know exactly when to exit my trade. And I exited my trade when we invalidated this bullish break and retest, and I got out of my position for 115%. And you can see sellers were definitely here, and we kind of found consolidation. And then later on in the day, we made an even further push to the upside, like a crazy push. I mean, I definitely wouldn't have held all the way through here. I would have re-entered at this double bottom, but those are my two trades for today. I made one small loser and 115% winner, which easily outweighed my losses. And that is exactly how I intend to trade. What I want to stress in this video, and I'll show you my journal again, is the ability to adapt. 115%, 438 calls, 0 day to expiration. It is not the strongest of species that survives, nor the most intelligent. It is the one that is most adaptable to change. Of course, it's Charles Darwin. It's got to be. Dropping absolute heat. But this is what I mean by being able to adapt to current market conditions. I'm telling you, I was that guy that would sit around and wait for the Head and Shoulders to validate itself. I was waiting for the trend line to break. I'm sitting here thinking, we've made a massive move today. It has to turn around. We have to see a reversal. That is a state of mind you need to fix. Do not predict or project any of your ideas on the market. You need to go with what you see in front of your eyes and play with it as long as it validates your trade to the upside with that break and retest. Kind of crazy looking at my journal. At the very beginning of the day, I'm seeing a perfect head and shoulders. I'm seeing a trend line, which looks like head and shoulders and trend line is going to break. And I jump to the end of the day and look at this massive buy up here. I'm sure so many people kept on going short all day because it looked like a head and shoulders. They kept on going short and got stopped out, feeling that move against them. You need to be on the side of the market and not be fighting it. Play with the flow and accept that if you analyze the market in a head and shoulders at the beginning of the day, accept that you are wrong as fast as you can. Switch your plan because the longer you hold on, the longer you go invested in a certain head and shoulders or a trend line to break, you're just going to hurt yourself more and more. I hope that helped. I hope you enjoyed the recap. Use these points, use your journal, use your pre-market plan, and go over all of your trades at the end of every single day and analyze how you felt in the trade and use that going forward on your next trades. I hope that helped. I'll see you in the next one.